Good morning, everybody, and welcome to the European Outlook for Student Housing 2020 to 2021. Really super panel for you today. We have Charles Combet, Rob Waterhouse, Samuel Vetrak, Lambros, Reppas, and Luke Nolan. My name's Richard Betts, and for those who don't know me, I'm the publisher at Real Asset Media. We run a series of events, newsletters, magazines, as well as interviews. Feel free to visit the website and you'll get a sense of exactly what we do. We've also launched a number of new initiatives during this crisis to help keep you connected. Special reports, which will be updated shortly. You can download those from the website. We launched Realcast, which is a sort of analysis of the key trends and themes for the week in real assets every morning. Real asset live events such as these, and of course, video interviews. And if you've got views, insights, strategy that you want to share with the community, please do contact us and we'll be happy to do videos and share your views with the community. And we're also launching realx.global, which is a virtual exhibition and conference on the 17th and 18th of September. More details of that coming shortly. But let's introduce the panel. Rob, let's start with you. Just briefly let people know who you are and what you do, so that then everybody knows which side you're working from.
So my name is Rob Waterhouse. I'm the Transactions Director at GSA. Hopefully people know who GSA is, but Global Student Accommodation says what it does on the tin. We are operating across 8 countries globally with over 25,000 operational beds and a deep pipeline to take it further. My role in particular has been JV establishment, corporate acquisitions, and debt raising, as well as new market entry. So that gives you a context as to where I come from.
Great, thanks very much. Luke.
So I'm Luke, I'm the founder of Student.com. Student.com, if you're not aware, is a marketplace for students. So we list about 1.5 million beds in 30 countries. We are, let's say, the Booking.com or Airbnb for the student housing industry. I started the business in China, and we have teams across Asia. I would say Asia is kind of one of our strongest parts of the world, but we have people all over the world, and spend a lot of time in North America, Europe, and APAC. Regarding how I feel about the current trends that we're facing, I would say overall I feel positive. I feel much more positive than I felt 3 months ago. But I say that amidst still, of course, a lot of uncertainty and a lot of new information. And while I feel overall positive, I would say it's very country specific. So in some countries, I feel things are actually much better than expected, and other countries are unfortunately worse than expected.
Okay, great. And we'll drill down into all of that later, and it's great to have you on board, Luke. Thanks very much. Charles.
Hi, everyone. I'm Charles. I'm working for the Aareal department where we are financing hotel and student housing. For the hotel portfolio, we are operating from North America to the Maldives, with, of course, a strong presence in Europe. And since now more than 3 years, we are expanding our portfolio to the student housing industry. And we are operating in Europe, but also in Australia.
Super, thanks very much. Lambros.
Good morning, my name is Lambros Reppas. I'm a managing director and heading the European team of asset management, micro-living and residential. CORESTATE Capital, it's a full integrated stock-listed investment and asset manager based in Luxembourg and Frankfurt. Currently, we have 28 billion assets under management, and they're of approximately 4.9 billion in the micro-living landscape, which includes, of course, the PBSA landscape. What's quite unique is that we have our own operator integrated in the group with CRM students based in Oxford and new apartments based in Leipzig. We are quite active in different countries across Europe, currently active in Spain, Germany, Austria, Switzerland, Poland, Denmark, and we opened this month an office in Italy.
Great, super, thanks very much. Samuel.
So we at BONARD, we are a research and data powerhouse for student housing. We hold a global inventory of data about 130 markets and about 5,600 buildings in PBSA sector. Our data is independent and certified, and we service up to 30% of the student housing sector, from investors to operators, developers. We have 4 offices, 50 people, and worked on more than 360 projects in this asset class. Let me tell you a bit about the nature of the presentation. It's about 10 slides only. And this is a result of about 60 sources that we have used to pre-produce either secondary or primary, but also about 80 conversations with our partners and clients, as these times don't necessarily allow to do only data, but also insights and foresights are valued. So this is sort of a cumulative summary of what we have learned from data and insights across the markets. First, our team prepared some overview of impact of COVID-19 in the 3 areas of demand. Overall, the pandemic caused that we have and will have less students in next semester. However, we all expect more students in and after recession that should be afterward happening after the pandemic and mobility is resumed. For 2020, over 80 to 90% universities plan on-site or hybrid lessons. Less international students are expected to arrive, not necessarily because of lack of demand, but obstacles to arrive, flights, visa, test centers not open, etc. So they might come in smaller numbers or later. So more dependency on regional and domestic mobility is relevant in the next semester for PBSA operators. Last semester occupancy rates, well, there are various levels across the territories. Probably, and Luke can also give us some hints over here later on. But from what we hear and get reports from, Germany and European city hotspots were doing the best, reporting over 90% occupancies during pandemic or even now. Not necessarily that those rooms would be occupied, but students hold the rooms even though they are not staying there because the demand is quite high and they could lose the room. US, UK, Canada, most of the reports are about 50 to 70% occupancies. Because they have a lot of international students that they didn't return. Iberia and Australia had a little bit lower or zero occupancies as they had to close some of the premises over there. Next semester bookings, uptake seems pretty similar level. Some people report higher numbers than 2019. Some slightly smaller, no drastic changes. However, the bookings and uptakes are more volatile because of the no cancellation fee policy and no deposit policy. So we all expect some changes to happen to the booking uptakes as we progress towards the next semester. From operational and design point, the adjustments, there have been many adjustments to maintain occupancies, varying from in-building measures, so desinfections, one-way hallways, universities hiring additional private PBSA stock or hotels to de-densify the saturation of students. Then measures on sales, especially on book to commence time, to maintain the volatile bookings as much as possible, and also reaching to new audiences. So not only house students, but young pros or others. And some of the PBSAs need to require special permission in some territories. Future product preferences are towards end student studio for obvious reasons, and rental levels, price levels for rentals remain stable. So increases and decreases are neither reported nor expected. Capital markets transactions are delayed but not stopped. About 62% of stakeholders continue seeking opportunities. Pipeline projects continue as scheduled. So out of 175 due to open in 2020, about 80% are on time. Alternative refinancing like mezzanine is back on table more than previously. Discounts are relatively small, and we see more opportunistic investors. In general, investors and investment world remains confident about the PBSA and student housing. we don't see divestments as fundamentals remain strong. So the defensive counter-cyclical asset class nature is believed to play well during and after recession that is expected to come after pandemic. So out of the V, L, U, and W scenarios, U-shaped scenario seems to be most likely so far. If the pandemic will ease and relax sufficiently in summer, economic recession is expected next 12 months and students arriving in or during the fall. Some in September, some in October. It depends on the particular destination. But in case of U-shaped scenario, it is expected that the students will come to classes sooner than the economy will come back to normal. If we come to W-shaped scenario, so means that the signs of new cases will become more than just local challenges, and it rises up to second wave, and we will see new blanket restrictions, lockdowns. Then it is very likely that the confidence of universities to open and students to come will shake up, and the arrivals will be noticeable later on, probably in Q1 2021. When we look at the history, every single pandemic had a second wave, not. On the other hand, the governments will hopefully learn the lessons to address the local new cases rapidly, like we have seen in Beijing recently, that within 2 weeks they were able to go to 0 new cases in last 3 days. The governments will be able to manage the new cases very rapidly and promptly. Student housing obviously has a problem when there is pandemic, so mobility restrictions and social distancing. However, the long-term fundamentals stay strong and solid. Pandemic, by definition, is temporary and one day will be over. So we can expect the afterward recession. And in afterwards recession, in last 35 years, when we look at the key markets, key destinations, number of students was increasing, and the counter-cyclical nature of this asset class showed up. And even more so, when we look at the last 70 years, so this is Germany, and we see even stronger performance of this pattern across the economic downturns. So number of students is growing in such economic downturns times, if not even more rapidly, as you can see, and be it domestic or international students. And actually the strongest ever increase in number of students was noticed in 2009 after Great Recession. So just to summarize some of the trends to build further projections on. So we will see a temporary decrease in number of students, and the dependence will be more on domestic students. However, we have an unstoppable globalization, so more mobility, more flexibility, more renting. Actually, studying and renting is more on demand in and after economic recession, as we have learned from the previous cases. Student housing counter-cyclical asset class will most likely attract more investor demand and competition. Therefore, there is time for opportunistic investors, and we see more of them these weeks and months. And as a result, the student housing sector has become the third most popular asset class in Asia, as it was probably in the second half of the ranking. So moving forward to the next semester, we prepared an overview of top 8 European countries. So you can see UK, Spain, and Italy here. Next slide is Germany, France, Netherlands, and Poland. We aim for the biggest student housing markets. And we prepared a comparison by factors you can see on the left. So I will first make an overview and then analysis. First, we look at whether the students with valid visa are allowed to come back, and this is so across all the 8 destinations. Then we look at the intra-regional students and proportion of intra-regional students, which means those who don't need a flight to come to their study destination. In other words, how is the destination dependent on intra-regional versus inter-regional long-haul students that might need a flight, and if there is no flight or expensive flight, it may create an obstacle. And then we look at the number of international students that don't need visa to come to that particular destination. In other words, we look at the dependency of the destination on intra and inter-regional students. And as we can see over here, the winners over here out of these three is Spain. And then when we look at the same factors here, then Germany, Netherlands, and Poland have really high proportion of intra-regional students that are able to come, as well as big proportion of students that don't need visa. On the other hand, France, UK, and Italy are not performing as well. So as a result, we look at visa centers opening and flights availability. So as you can see over here, the best player in terms of how the visa centers and issues of new visa is in operation is basically UK. So up to 40% of visa centers are reopened and new visa applications are accepted online, which is quite a benefit, if not advantage. While most of the other destinations have visa centers closed or visa services suspended. As you can see, Spain, Italy, and Germany only 20%, France closed, Netherlands some openings, including non-EU countries, and Poland is doing quite well in these regards. Then we look at flights. So we made the research on the flight availability for the upcoming period and how many flights or what proportion of flights should be available up until end of summer. So UK plans to resume 70% of flights, Spain 75%, but when we look at Italy or France or Poland, it's only 40%. And when we put all this together, so what is the dependency on intra or inter-regional students, how many visa centers are open or flights available, then Germany is doing the best in this ranking, while France is probably at the end of the availability of international students to come or process their visa. At last, the most important factor, so academic year and what are the plans of universities. So when I start with the UK universities, 90% of universities plan face-to-face study in small groups, with lecture delivered online, either as a tutorial or a broadcast, so either as a hybrid or blended learning. And this pattern is basically visible across the other destinations pretty much. So some universities decided to do online only, but predominant majority of universities are still aiming to resume face-to-face with a hybrid or blended learning. The last factor, students allowed to return to PBSA. Well, this is allowed across with minimum restrictions so far. So how the next semester should look like, some factors. This is second to last slide. We are in between the U-shape and W-shape, local versus blanket restrictions, and nobody is in a position to say what will happen. Probably next 2-3 weeks will be decisive for next semester in determining the scenario over here. Provided that we will experience the U-shaped scenario, we definitely know from multiple researchers that we studied or did ourselves in China, in Brazil, in Russia, and so on, that students don't want to study online only. The onlineization has not affected this asset class as much as probably business travel and offices. So it didn't leave the permanent footprint. Students want to resume classes as soon as possible. So they don't defer, they don't delay their start. They would like to start as soon as possible, but they have to have the prospect of the on-site face-to-face learning within 6 months. That's basically usually the decisive factor. 80 to 90% universities want to resume face-to-face. However, hybrid and blended model is almost a must, not only for health and safety reasons, but many international students will arrive late or later because of the obstacles with testing centers, visas, and flights. That's probably a given. And what we expect is that we will see more decisive university announcements in coming weeks. Actually, there is a direct correlation in between when probably Luke or colleagues from GSA or CORESTATE will confirm that once the university announces their decision to open or to do a hybrid or blended model, the number of bookings for PBSA is immediately increasing within days or weeks. So we expect the next 2-3 weeks to see more affirmative announcements of this nature. PBSAs, so we expect that they will announce more health and safety measures and how they address COVID. We've seen special manuals of colleagues from Unite and how they address it and others. So we expect more of these to assure students that they will be safe, as well as more book to comments period sales improvements. So there are quite many bookings in the records, but how many of them will be able to be maintained is probably the new sales art that the sector will develop. PBSAs will focus on more domestic and regional students, as mentioned, but also look for alternative audiences, so to house not only students, but also young professionals, which will probably also have a longer footprint and the asset class will experience co-living, even though it might not intend to do so originally. And PBSA, some of the PBSAs, including public stock, is not expected to open for cost reasons for next semester, which can actually increase the demand for private stock later on. How the 2021 might look like, either because we learn how to handle the situation, or there will be a vaccine. 2021 is expected that the mobility will fully resume. We will see relatively strong destination shifts. When we interviewed students, parents, and agencies around the world, we already see 5 to 10% shifts away from US to Canada to predominantly Germany, which seems to be a winner in this regards, but also to alternative destinations like Singapore, Prague, and others where they developed English provision. We will probably see same level or more students if the same pattern is followed, and then we will see more investment demand. So if in these times we already see more investors entering and investing in this asset class now, it is reasonable to expect that there will be more investment and capital available for this asset class in 2021. And this will be coupled with more availability and opportunities as student housing asset class needed to compete with other asset classes for land or stock. For retrofit, there will be less competition of this nature from office or from hotels. So the situation might be more fortunate in this regard. We anticipate that this will have an impact on pricing. The yields have not changed so far in most of the territories, and if they haven't in these times, then we
Good. Thanks very much, Samuel. Very interesting. Lots of Q&A coming in and chat as well, picking up some things. So let's dig straight into some of these topics, because there's some really interesting things to pick up from that. Luke, coming to you, obviously you're seeing, I guess, student bookings live in a way. So you're already beginning to see what people are doing. Just give us a sense of, and I know this is designed to be around Europe, but I think because we're talking about international students, it's really useful to get the sort of international view that you've got. What are you seeing at the moment in terms of bookings?
In terms of bookings, I feel like booking performance is, as I said in the intro, I feel better than expected originally. And our across the board on a global basis, our bookings are sitting around 80%, maybe 85% of original target. So I would say that's a yeah, significantly better than I expected going into the summer. But we're really concerned about cancellation rates. And I think that the UK and a number of other markets have done a really good job. I think Europe generally has done a really good job of allowing flexibility, so that international students can book subject to being able to actually check in. And I think Samuel did a great job just to highlight some of the major reasons why a student might not be able to check in even if they want to, so like travel restrictions and visa restrictions. And I think on top of that, there's also a huge variety of university policies, not just by university, but even by student. So, for example, undergraduates versus graduates, different years where, you know, when will in-person class take place? As Samuel said, students want to get back to class ASAP. So, from an international perspective, as an international student, you know, just doing it online is kind of to some extent defeating the purpose. And so when I say we're really worried about cancellation rates, we are, I think the biggest exposure the whole industry has, certainly for us as well, is you know, how many people will actually check in September, October, or November. So we ran a survey, and a lot of the findings we have from our data is actually very similar to what Samuel has presented. And I look from a country-specific perspective. I know, of course, a lot of people dialed in here are very interested in countries like China. And so I think it's interesting to note that, for example, across the board, of all students we've surveyed in the last month, about 6% say that they plan to cancel, whereas in China, that number is closer to 17%. So that's kind of triple other countries. And I'm just giving one example. I think there's a lot of countries in the same bucket as China. And that cancellation is, you know, for 5 or 6 different reasons, which, as Samuel's already talked about. So yeah, I do think it is a really mixed bag of news. I think most people on this call are based in Europe. I think to put it in perspective, though, I think Europe is having a really positive time compared to US and Australia. I think Australia's, you know, theoretically kind of having the worst of it, because they already, you know, the first spike happened during term 1, and we're now in July for term 2, which is not going to happen, especially in places like Melbourne. So it's I think it really, you're right. It really depends source country and destination city that there's a bit wide range of cancellation rates and when students are expected to check in.
Rob, I just wanted to pick up on your kind of views. How are you seeing this? Because obviously you're also operating globally. So how are you seeing it? Are you reflecting what Samuel's picked up in his research and what Luke is seeing? How are you seeing that from your perspective?
No, I think it's very, very common with what both Samuel and Luke have reiterated there. Markets like Germany and UK, where the sales are actually doing fairly strong. Germany in particular, which I'm sure Lambros will also go into further later, is very resilient to the whole COVID-19. It really hasn't seen much of a downturn. Germany has dealt with the pandemic in a very good way, and that meant that occupation levels have remained pretty buoyantly high, and sales for the next year have consistently remained high as well. UK, I think to Luke's point, the fact that the cancellation offering has meant that sales are strong, but I guess there's always the caution of, well, what does that mean if there is a second wave, and how many are going to turn up? I think from a UK perspective, again, you know, the Chinese want to come over. All internationals want to come over. It's going to be the reasons why they can't come over, which is going to drive the cancellation, not because of their desire to cancel. And then touching on Australia, we have mirrored exactly what Luke has said there. You know, the pandemic hit at the worst time for Australia. It was at the beginning of their semester 1. Whereas anecdotally, you know, the US, they don't rely on international numbers as much. I think the internationals in the US is 5%, so it still represents 1 million students or more, but it's a fraction of where they are, and just they observing the US rather than actually acting in it at the moment. We're seeing that their occupancy levels are holding up, and their revenue levels are also holding up. but we've highlighted that there's various visa challenges with the US and Chinese relations at the moment, causing issue, and potentially if universities are going to close and do online learning only, they're potentially revoking people's visas and they're forcing international students to go back home, which is causing a real issue in the States.
Okay, good, interesting. And just picking up with you, Charles, just in terms of the, I suppose, the financing side, you've obviously got to get this through your credit committees and those kinds of things. So how are you seeing the market, and have you seen have you seen a change in emphasis on the financing side?
From the bank's point of view, in terms of risks, we can say that student housing has proven to be extremely resilient during the current crisis. Most of the property or the portfolio that we are dealing with, or what we hear and see from the market, they all remain open, which is already a good news because they're all generating enough cash to cover sufficient buffer for the covenant that we have put in place. In terms of committee, when we approach our committee, the guarantee that we bring to student housing is the cash flow is secure for at least a semester to one academic year, which is during this currently it's a strong fundamentals. Now the question will be for us, and the question we have from our risk department is how the next academic year will look like. So still in terms of fundamentals, we have lots of studies proving that during crisis, the number of students is increasing. But there are concerns regarding travel restrictions, visa. We have found out in some markets also that some local students could partly replace the international student for the next semester, but that's not sustainable enough. So the question is really how the investors will adapt their business plan. But so far, what we can see in the most mature market where we are operating, such as in the UK and London or in Australia, the portfolio is doing quite well.
Lambros, from your point of view, there's questions coming in around types of accommodation for students. What's your sense of that? Is there a change in demand? Is it something that you're trying to figure out at the moment where demand will be for that, whether it's going to be more private apartments, whether it's shared accommodation? What's your sense of that? Do you see it as more a temporary thing or a longer term trend?
We're quite convinced that this is definitely a temporary thing, not really a long-term trend. We're convinced that COVID-19 will not have a lasting impact on the student housing landscape and also on the micro-living landscape. And we include in the micro-living landscape also the co-living proportion and the service apartment proportion. What we see, at least in Germany, in the German PBSA market, as already mentioned also from Samuel and from Rob and Luke, it's a very resilient market. We run approximately 20 properties currently in the German market with an occupancy rate before COVID of 98%. Now, during COVID and after COVID, most probably, we are around 94 to 96%. So the impact is not really big. However, we need to differentiate between the countries, obviously. Spain had a quite hard hit during the COVID-19. However, the market is getting gradually back to normal, except, of course, the travel limitation of international students outside Europe, as already mentioned from Samuel corrected. However, we should consider that we had a high proportion, in particular in Germany, of rebookers. So the properties were already occupied before the pandemic gets this dimension we have right now. And back to your question regarding the difference of layouts within a property, it's very interesting in the Spanish market, for example, where we have also cluster rooms and shared bathrooms and kitchens. Our logical expectation because of the COVID-19 pandemic was that students will be more hesitant to rent out an apartment with shared bathroom because they have to share the hygienic area with another student. However, we rented out the clusters first and then the rest of the apartments. So what we see currently on the market is that the key driver remains affordability, even if we have a pandemic.
I also noticed, just in terms of the German market, just an interesting thing, which is that a friend of mine's son, who should have been studying as an international student in Amsterdam, because his course was online, has then decided to go to Berlin instead and live there and do and live as a student in Berlin whilst the online one is going, because affordability was a key issue, and Berlin was much cheaper than Amsterdam. So interesting that picks up that point as well. I'm just going to do a quick poll here just to assess the sort of market view of everybody, which is, how do you feel? Do you feel more positive about the market for student housing than in March 2020? And I'll come back with that and tell everybody the results of it in a minute. Let me just share the results of the poll. So do you feel more positive about the market for student housing than in March 2020? 69% of you said yes, and 31% said no. So that's interesting, and I think probably reflects quite a lot of sentiment, because I certainly think there's more of a view now in terms of students actually coming back. I mean, I remember a couple of months ago when we did a similar session, and there was significantly more uncertainty about whether or not people would come back. Just picking up with you, Luke, the point about student desire, aims in terms of the type of accommodation. Are you picking up globally as well what Lambros is seeing there, that in fact affordability is still the key issue? Yeah,
I think affordability is still the key issue, but that being said, of course, whereas previously, I'm generalizing here with markets, but previously the difference between a studio and an ensuite product might be kind of singled in very much on price. Whereas now, of course, even a little bit more, independent, so to speak, and kind of, being able to live on your own terms with less kind of lottery, because I think not only students but also parents think that different parts of the world have different approaches to how we deal with the pandemic. And so, for example, a lot of countries around the world, in Asia and Africa and Latin America, have been through pandemics before, and so kind of feel like they are kind of more used to it. I mean, of course, you hear a lot about this. So when students are traveling to another continent, the idea that they can control their personal space more is one added reason to let's say upgrade to the kind of more private type of property. I see also there was one specific question about co-living, and I'm not sure if that was specifically on co-living as an asset class or as a type of shared versus non-shared. But yeah, I do think that that social distancing and how things are logistically going to play out when people get to destination are major concern and consideration. And actually, in our data, I talked before about cancellation rates. Actually, I think even more concerning than cancellation rates is the I don't know bucket, right? So like I would say, in a market like let's say a domestic market. So I think Samuel referred to this as the intra regional, where people don't have to take a flight. Then for our data shows more than 50% of people expect to check in. If 1 or 2 months late, but they will still check in. But for people who are international, so in moving continent, our data shows that more than 50% of people are in the I don't know bucket, and the I don't know covers a lot of things, including what is it going to be like, how am I going to live, how am I going to study, how am I going to interact with other students, how am I going to interact with the university. When do you think the majority of students will be back at university? And I've given the options of autumn 2020, January 2021, May 2021, or later. Be interesting just to get everybody's thoughts on that, because that will be a key question, I think, picking up your point there, Luke. Rob, just coming to you, there's some questions as well, particularly around international students, but also destinations. Are you seeing any change in terms of favor, I suppose, for locations? And do you see
there being a replacement of maybe if there are some international students lost to China, maybe India and other areas will begin to take that over. What's your sense of the sort of broad general market in that sense?
So if we focus on the UK, because that's probably where I think a lot of that reference is, particularly for Chinese students coming over, it's fair to say that the number of Chinese students that may not come over will be offset by the increased UK domestic students. We're now starting to hit the bottom of the V of the number of 18-year-olds and sort of the birth rates. So for the next 10 years, we're going to see an increase in UK 18-year-olds. That is having an offset. But we've also got to factor in, and probably wasn't the intention of this conference, but Brexit also needs to be a factor as well with the UK markets. But the EU numbers are a fraction of the wider international base. In terms of the Indian markets, I think the same concern and fear is still going to be there. It's going to be around visa, it's going to be around travel. So I don't think that the desire has fallen away. It is more just about the ability to get there. So I still think that the number of Chinese students are still wanting to apply. It's just a logistical matter.
Okay, good, interesting. I also had a question coming in, which was actually addressed to both you, Rob, as well as Lambros, which is, when are you both going to be in the French market? Have you anything to share?
Yeah. From GSA perspective, we're looking at many new markets and have been and will continue to do so. But it's fair to say that at the moment there's a lot of challenging matters going on. So rushing into any new markets is not necessarily going to happen in the immediate term. But it very much is on the radar. France plus a number of other European countries would be of interest.
Okay, good, interesting. Let me just share the results of the poll, because I think that's interesting. When do you think the majority of students will be back at university? January 2021 is 49%. Autumn 2020 is 26%, and May 2021 or later is 25%. So that's interesting that it's perceived certainly as a short term issue rather than a longer term issue in terms of students. Charles, just coming back to you, looking at the geographies, the cities, the countries, do you still follow pretty much the same strategy that you did before, or are you beginning to look either at different countries or assess countries in a different way? So has it changed the ones that are on your map as a lender?
A bit of both. It's a lender answer, but that, so to say, what we are currently looking at across all this market is where are the values. We are in conversation with our valuers, and we see that some of them are taking some discounts due to the COVID-19, and where the LTV for this market will evolve. That being said, you probably know that the refinancing costs for the bank have also increased. So in terms of margin, we see some evolution across most of the market where we are operating. Now, in terms of pure geography, it's also a link with the market that are under supply more than others. We can definitely say that the most mature liquid market is, of course, the UK and once again, Australia. We have seen some large transactions the last 12 months. We see a lot of projects also in Poland. Last year, there was a strong focus in Spain and Portugal, but we are still looking at projects in those countries. We are maybe more cautious in terms of LTV we will supply.
Okay, good. There's a couple of specific ones for you in the Q&A, Charles, and I'll come back to those shortly. But I just wanted to pick up, Lambros, if I can, with you, on the France issue, which I think is interesting, because then there's a second part of the chat, which is that there seems to be an underrepresentation in France. Why could that be? So it'd be interesting just to pick up your views as somebody who really looks at that European market, just your sense of the French market. And I think there's also interesting things around capex and things like that for well-being, social distancing coming in, but also questions around new developments, especially, and what your experience is of new developments. Are they being let? You know, what's the position with those? So feel free to. I know that's an awful lot to give you, Lambros, but we're running short of time, so pick up what you can.
Try to pick up first France. France is a very interesting market for us. We have also ongoing discussions with some co-living operators in France. We believe that to jump into a market like France, you need French people on site. So that's the reason why we start our discussions with operators in France. And we believe that in the midterm, we will definitely build up our portfolio also in France. And we see also equity is willing to move into France because the PBSA market is very strong and the residential market is very strong. We have a very detailed expansion strategy within the micro-living landscape in Europe. Countries such as Italy are very interesting, Portugal, Holland are very interesting. We are already in Poland with 2 developments. One development is close to completion by end of this year. We see that Poland is currently very quiet at the moment. But we need to point out that due to the delay of the high school graduation, the marketing activities and of course the booking cycle have been postponed accordingly to 1 to 2 months. So we wait for students beginning or mid of May or June, and now we see nobody's willing to move in because the graduations of the high school will be around by end of July, beginning of August. So the marketing activities and cycle has been also postponed, as already mentioned. Poland still remains a very interesting market in the PBSA, but very sensitive also in terms of affordability. We have currently Gdansk. We will operate Gdansk most probably by end of September, beginning of August. And we have one site under construction in Krakow. Also a very interesting market for the micro-living landscape, PBSA, and also service apartments. We built a mix of both, so service apartments with approximately 130 beds and 500 beds for student accommodation. We still believe, and as already mentioned, we are convinced that the micro-living landscape remains for our generation, also for the future generation, the absolutely mega trend. Because everybody will travel, traveling will remains one of the key KPIs for our current and for the new generation. So we believe that micro-living remains resilient and will going forward be the asset class to move in and to put our equity in.
Is there going to be more flexibility in terms of contracts? What are the main incentives you plan to provide on contracts? Luke or Rob or anybody on this particular topics in terms of flexibility, is that something that's going to be needed, do you think, as an incentive for students?
Yeah, I think personally, I think the people who have added most flexibility, the operators who have added most flexibility in terms of starting date are doing the best. We definitely see that in terms of performance for some operators compared to others. So as in, if a student shows that they're going to come 1 month later or 6 weeks later, that they can be totally flexible on the exact start date, which is something new for the industry. And I think we first, because PBSA has been had the benefit of being basically full all the time and used to these 10 or 12 month contracts. We've never, the industry hasn't really tested, for example, January starts, even though the demand was always there. A couple of years ago, there was a property in London which after refurbishment happened to open in January, and we leased it in a couple of weeks. Until availability was completely gone. So I think personally the interesting thing is that we're kind of breaking the normal cycle and allowing a lot more flexibility. And Rob, you probably I know you have also experience in Australia. Like Australia already moved away from annual contracts to term 1, term 2, kind of 6-month contracts first, and I think they have some experience. So I do think there's other markets that Europe can look towards, and I think offering flexibility not only basically solves the problem which we all have to solve for now by default, but it also opens up the ability to essentially move closer to not really a hotel model, but certainly a kind of like shorter term model where different tenancy lengths will have different prices, so you can basically allow for some kind of dynamic pricing. So if you want to have something shorter, then you might pay a little bit more. If you're willing to lock yourself in for 2 years, for example, then you'll get a lower rate.
Okay, good. And Rob, feel free to pick that up if you want, but also just in terms of some of the fundamentals in terms of rental valuations, those kinds of things. How do you see those kind of market fundamentals for people looking to invest in this sector?
That's the key. I think, as Luke says, yes, there could be a change in the way tenancies are done and being more flexible. That will have to be reflected in price. But the other factor that we need to think about, and the investors have an expectation of return. Banks also have a requirement of income. We need to service interest. So there needs to be that sort of reassurance of level of certainty of income. Because if we start deviating to a hotel model, then there's a question over the strength and resilience of the cash flows, and then does that have an impact on valuation? So we definitely need to strike the right balance. I don't see a pandemic clause being continuously written into every contract going forward. We need to be very careful on that front. We've seen that the UK, led by sort of some of the big PBSA operators, has, I suppose, driven a UK standard which created the compensation or the refund policy. But I don't think year on year you could be absorbing that as a sector. So I do think that there is a market for term one, term two, and I do think there's a pricing there. And I think universities may become more adaptable over time in terms of their course offerings, and that's what will also link in with sort of the semester rental. What's
your sense? Let's start with you. Let's start with you, Lambros. I suppose where we are in the market, looking forward, where do you think the opportunities are at the moment? And also, I guess, has anything positive come out of this from your sense? I wanted to pick up with you, Luke, as well. But let's start with the investment thing with you, Lambros.
In which country and when? I believe it makes absolutely sense to still invest in Germany. However, we should consider that the prices are getting up. It's a very expensive market. So in terms of returns, the returns are quite low compared to other countries. We are convinced that Italy will move in the right direction in the PBSA and also in the Scandinavian market. And of course, Poland. Poland remains, from my perspective point of view, a very interesting market to invest equity in various fields. So also not only PBSA, also in co-living and service apartments.
Okay, great. And Rob, from your perspective, what are you seeing at the moment in terms of the opportunities?
Unfortunately, a pandemic and a global environment will create opportunities. Well, unfortunately not for some, but opportunity for others. So there's definitely an observation there, but I don't think you're really going to materially see anything until Q4. That will be for parties which are perhaps over-levered. But as a sector as a whole, our sector has learned from sort of the global financial crisis in 2008 onwards. Our sector has not been as highly levered, so therefore we're not seeing sort of broad brush distress. There will be individual opportunities, and that will be seen across various markets. But in terms of a new market activity, I agree with Lambros that some of the markets there referenced. Poland is an attractive market which has scale and opportunity, but very, very low rents. So the affordability aspect is a key. While they have strong international numbers, most of their internationals are the same continent, i.e. from Ukraine or where have you. So there is still a lot of opportunity across Europe in terms of numbers, but directly we're also focusing on UK still.
Okay, look, and anything in terms of the numbers that leads you to see either, cities or countries currently being potentially more attractive and more resilient than others?
From our perspective, if you break it down by city or by country, it really depends on. Let's starting with country. I think it's really down to travel policy or visa policy. So since the U.S. has American embassies all around the world closed, that numbers have completely tanked. I think numbers in the US for us are down by 70 or 80%. To explain how extreme it is from an international student perspective. When you look at a city basis, it's very much dependent on what the university is doing or has done. As soon as you get out of the big cities like London, or big European capitals, then it's one or two universities. So then if a policy has been clearly laid out to students, then the city and the performance of that city will be significantly better than others. Just to give you an idea of how wide the range is, it could be 3 or 4x better in one city compared to another, just based on policy that's come out based from a university.
Okay, interesting. And Charles, from your side, you're obviously looking to lend on these areas, or are lending on these areas. In terms of the opportunities, whether that's cities, countries, what are you seeing? What do you favour?
Generally speaking, as long as the fundamental remains strong, we are ready to follow our investors and finance them. To add to the countries and the city specific, I mean, the recognition of the university ranking is also something important for us. Its ability to attract international students. What we can tell is the last years we have seen more and more institutional investors entering the student housing market, which is also a proven sign that the market is maturing.
And Samuel, interesting actually there that Lambros picked up Poland, because I remember especially in some presentations that we've been doing previously that Polish market has been viewed as more attractive. What's your sense at the moment? I know you're independent researcher looking at it, but what's your sense of what the research and the numbers are telling you in terms of what's likely to be the best opportunities coming up?
From the global perspective, it is very likely that we will see those destination shifts I mentioned. So less so in the United States. UK will remain strong. Based on the conversations we have with the universities and government agencies, it is very likely that Canada will gain from this, as will Europe. These will be probably the biggest winners of the COVID situation. And out of Europe, not only because of COVID, but also based on the overall demand and variables that the investors are looking at, I think the big countries will be on demand. So Germany, France, Poland, Spain is basically a running train already. Italy, I think the players that are about to step in, they already flex their muscles and know that they will only execute that. But from the new markets, I think Germany will come strong, back on table. France will open up and people will push. And Poland, we have recently worked on multiple research exercises in this market. It's very vivid. The interest is strong. As Rob said, the mobility is intra-regional. On the other hand, the market is so undersupplied and the universities work so hard on bringing more international students, also long-haul students, that actually numbers are playing very well. So you can charge Warsaw 450, 550 in that bracket, so it's less than the 600 European average. On the other hand, the build costs are not 65,000 like in Vienna. per key, but you can build for 40 to 55,000. So that's also a sweet spot over there. Yields are still high, so it's like an island 5 years ago. So we believe that Poland will be strong as well.
Interesting point from Stuart Ruff as well. Hi, Stuart. Thanks for joining us. Just on that, they're designing a lot at the moment. Universities and schools, English language ones essentially, within China, and there's a desire for China to keep students in China. So do you see that as being, I suppose, a potential impact on the European market? What's anybody's view on that?
From my perspective, just the numbers in China are so huge that it's still a small percentage that are traveling. Yes, China has got aspirations to have US, UK style universities in their country, but that's a 10 to 20 year sort of program, albeit I know they can build a hospital in a number of weeks. So I think we've got to play the numbers game there. With over 1 billion students in China, there's still going to be that demand for people to travel. You still got the reputations of the UK and the US and growing the European universities.
And there's an interesting topic here as well, which is, thanks Arsenal saying for this, which is India has 36 million students compared to 19 million in the whole of Europe. Will the strategy be different to enter? I suppose, is this an attractive market, and both in terms of Indian students, I guess, coming to Europe and the UK, but also as a potential market?
I think a number of people have already started investing in India as a destination, but I think it's a very different landscape. So I think typical investors who are looking in a European continent will have might not be willing to move to such a different investment environment. I think India's generally had lots of good news from in terms of Indian students studying abroad, because visa policies have generally improved over the last 12 months. And I think I would also just add to what Rob was talking about regarding China. I think this point about foreign brands and being invested in China, I actually see that as a positive rather than a negative. So, NYU as a New York university opened a big campus in Shanghai. It started with a handful of universities investing in campuses in China. Now we've got hundreds. The good thing is that it's actually a more efficient way to collect a student in their first or second year when they might want to be closer to home. And also it's more cost effective because they don't have to travel, but then exchange in this kind of second or third or fourth year. So I think that actually that's a really positive thing. And I think, I personally lived in China for more than 10 years. So I think one thing that I would just share generally, like from a cultural perspective, for anyone who hasn't spent a lot of time in China, from the age of kindergarten, you go into a school system which is either Chinese or international. So that choice is made at the age of 3 or 4 or 5 years old, probably even before that. And it's a kind of a fork in the road, and you can't go back. So if you've taken the international or American school or French school or German school system, no matter what, you're eventually going to study abroad, right? Other than you decide to do all of your further education, or you skip further education, but and go straight to the kind of professional market in a country like China. But in summary, I think that investment of foreign education brands in countries like China, Malaysia, Thailand, Indonesia, India, all of these places is actually a positive thing for European destination education.
I think the political circumstances are much more important over here. I think what we could see a few years ago when the Indian students were predominantly increased for the United States, the situation changed, and then they become the most important increased nationality for Canada. I think this pattern might happen also in the UK, that more Indian students, we will see more Indian students over there. But in general, the UK is in a situation when it needs to face the 120,000 EU students that will pay full fees as of next school year, 2021 onwards. And what this will do to the destination, it's about a quarter of all international students there. and a sort of a more solvent part of the international cohort. So I think the UK as a study destination will need to take some bigger decisions, especially on work rights, because Indian students, for them studying abroad is an investment decision. And when you look at all the research and surveys on Indian students, they always calculate how they can pay off the investment. So they need to have a working prospect, which UK is better now, but not competitive with other destinations like Canada.
Have the panelists seen any stress or distress in the market impacting on pricing? We hadn't really talked about it in terms of pricing, but pricing in terms of land or capital values. Rob, does that pick up the point that you were making before about that these kinds of things will come through later in the cycle?
I think you can put it into two buckets. You've got investment assets which are highly levered and have got a short-term cash flow challenge, and therefore could find themselves in a matter of distress. But as I say, as a sector generally, I don't see that being a significant aspect to the sector. In terms of land deals, where I think the real challenge is on the banking side, because ultimately, as Charles has said, LTCs, LTVs have come down, margins have gone up, the valuers have only just released their material adverse valuation clause, so that's had a delay on various bits and pieces. There are not a huge number of banks out there at the moment that are able to provide the development finance, and that's down to banks being heavily exposed to other sectors, hospitality and retail, and therefore preserving cash. So that is what's more likely to have an impact on land values, just the delay in development activity.
Thanks very much, Samuel, Lambros, Luke, Rob and Charles. Really interesting discussion. Thank you for joining us. The next session that we'll have will be RealX Global on the 17th and 18th of September, and there'll be a program coming for that shortly, so please do watch out for that. In the meantime, thanks very much for joining us. Thank you for sharing your comments, your questions with us, and look forward to seeing you at the next event. And in the meantime, stay safe and stay well. Thanks very much for joining us.